Today, we're going to start the conversation with Stefan Batory, co-founder and CEO of Booksy. I met Stefan a little while back, and we did an entrepreneur journey story on his journey, and I found it fascinating and enlightening, and I invited him back to talk with us at the roundtable here today. I expect that you're going to learn a lot. So welcome, Stefan. Great to see you again.
Welcome, Sarmana. Great to be here.
All right. So I'm going to focus on a few different pieces of your journey and try to highlight some important elements that you have, practiced that are strategic and principles that we actually teach quite regularly in our program. So the first one is you bootstrapped a company, a marketplace company with a services business first. So could you talk about your services business? What was it? How did you do it? You were doing this from Poland. So talk about what was the environment in Poland at the time, so we can get a feel for the beginning of your journey.
Of course. So Poland is famous for having one of the best education system, and we have some of the world's finest developers alongside India, Russia. So Polish developers are always ranked in top 3 in various competitions ran by Google or Facebook or universities. And my first business was just a software development house, and we built custom software for various clients around the globe. We worked for clients here in the US, in Africa, in Latin America, in Asia, Australia, and all over Europe. But what I realized was that this model wasn't really scalable, because to double our revenue, we pretty much had to double our headcount. And year after year, for 12 consecutive years, the company had been growing 2 to 3x every single year. Deloitte put us on the list of the fastest growing companies in Europe, Middle East, and Africa. But it was very grueling, because recruiting so many developers every single year, it was just scary. And at some point, I started looking at different business models, wondering if I can leverage great developers that we had in Poland and great talent with a model that was more scalable. So that's how I transitioned from running a service business into a SaaS-led marketplace, which is Booksy.
And just a couple of questions about the services business. How big did it get? How many people? What kind of revenue levels did you get to before you switched to Booksy?
So I had over 200 developers when I left the company, and we had over $10 million revenue.
Okay. And tell me a little bit about, you said you left the company, your partner from the services company continued running the services company. What kind of a deal did you do when you left? Your shares were still there? Did you sell your shares? What was the transaction?
So that company had a subsidiary, actually 2 subsidiaries. One was a ride-hailing app, iTaxi, which is the leading ride-hailing app in Poland. And then there was a part of that business that was a spin-off that was also a service business. So basically, we split the company, and I got those 2 subsidiaries. And part of my shares, I still, hold shares in that primary company, but I took over those 2 smaller companies or subsidiaries. And Booksy is a spin-off of the other one, because that company worked for so-called classified media newspapers, local community newspapers that helped local businesses to advertise and people to trade and buy and sell different stuff, like cars, like pets. And one of their biggest category were services, home services, professional services, and personal services. So at first, when we started thinking about Booksy, It was supposed to be a white label solution for those classified media providers to address their need to build a mobile product for local services. And I came up with that idea when preparing for Marathon des Sables, which is the toughest foot race on earth, 6 back-to-back marathons across Sahara Desert in self-sufficiency formula. And as I was ramping up my mileage for that race, I had an issue scheduling appointments with my physiotherapist. I couldn't get hold of him. And whenever I tried to call him, he was busy working with his hands, so he couldn't take my calls. And I had the need. He wanted to make money, he had availability, but I didn't know that he had that availability. So I started thinking how to solve my very own problem and also his problem. And then I realized that pretty much everybody who works with their hands, whether they paint somebody's nails or they cut hair or they give somebody a massage, they work with their hands and they are not able to take calls. And then I connected the dots with the local services as a broader category that, we could also include plumbers and roofers and handymen and a lot of other verticals. But as we started analyzing the market, we had that feeling that it was too broad of an approach, and that, to build something big and to be great at something, you have to focus. You cannot do everything. So we decided to double down on hair and beauty as our wedge to win that market of local services.
Very interesting. So folks, those of you who are listening, I want to highlight a couple of nuggets in what Stefan has said so far. This model of building a services company and then incubating product ideas or marketplace ideas or e-commerce ideas or SaaS ideas within a services company is a tried and true approach. So as you know, we promote and espouse the bootstrapping using services strategy very, very heavily. It's a tried and true strategy. We know entrepreneur after entrepreneur who have succeeded with this model. So we like this model. We see great potential in this model. And there's, huge technical talent out there who are, capable of building, tinkering, experimenting with different ideas. And I think this is a very, very interesting story that Stefan is telling us of tinkering with some ideas and then really validating the market to get to a product market fit situation, which is in this case, scheduling software as it pertains to hair and beauty, local services, hair and beauty. So Stefan, let's talk about that phase of your journey. You now have product market fit. You've decided to go into the hair and beauty market with this scheduling software. What happens next?
Well, we bootstrapped the company. We built the product, but the revenue the software company was generating, it was barely enough to build the product and to maintain the product team. But we didn't really have money for acquisition. So we decided to raise a round. And that's when we spin off Booksy as a separate entity to get funded. And we raised our seed round in literally, that was the last day of July 2015. Got the money and started hiring people here in the US and in Poland as our initial 2 markets where we launched Booksy. And it was a lot of trials and errors because we didn't really know how to sell it. Both Konrad and I, Konrad is my co-founder and partner, we knew how to build software. We knew how to market that software, but we had no experience with field sales, with telesales. So it took us a few months to figure out the whole process. We knew we had product market fit because at the time we had, I think, nearly 100 service providers using us. So they validated the idea, and that allowed us to raise that seed round. But the next phase was basically learning how to build a sales team, how to scale that up, how to manage the team. And then the next step, as the company started growing, was how to build structures, how to build that management team that would help Konrad and myself to manage this growing company.
So I will spend some time talking about your financing strategy in a bit, but let's first talk about how did you sell the product? What was the go-to-market strategy that you settled on that actually worked?
It was a lot of trials and errors. In the very first few months, it was me who actually visited salons and I was selling by myself. I have this strong conviction that before you actually hire sales guys or a sales director, because a lot of founders, a lot of entrepreneurs, they don't know how to sell. So they are hoping that, when somebody from the outside with sales experience comes on board, they are magically going to solve all of their problems. But the issue is that a lot of these sales guys, they are professionals, but they don't understand the product that you build. They don't understand the market as well as you did. So even if you are not as effective,
they don't have the patience to experiment. They want you to figure out how to sell, what message will work, what is this go-to-market strategy, and then they will come and scale that. They will come to the rescue of victory. They don't have the patience to figure out how to sell.
Absolutely, you just nailed it. And then, there is different sales approaches and there is different sales talent out in the market. So before you hire people, you need to know, what kind of a sales process is it? Is it like more of transactional sales, or is it more relationship building? Like how long or how short is the sales cycle? So that's all that we figured out on our own. And even though I was not as efficient as I could have been if I were a great sales rep, I think that was a very valuable lesson, and that gave me even more conviction and the whole team that we really have product market fit, and it's only, fine-tuning some of the details, fine-tuning the sales processes and hiring the right people to do that. But that was crucial, that we were able to learn how to sell on our own before we started hiring people.
And what was the conclusion? Were you selling by phone? Were you doing Google AdWords and basically self-service selling on the internet? How were you selling?
That's a great question. Actually, we had two different conclusions in these two markets. So in Poland, we decided to launch field sales because online advertising didn't work for us. And in the US, we went with online advertising and then telesales that basically worked with the leads we acquired online. So these were two distinct strategies. And back then I was unhappy with that because I was hoping that we could have figured out, a common model across different markets. As we started launching more markets, it was a problem. And at some point I was even willing to pull out of the field sales model because it's always more headache, it's more hassle, and it's more expensive to hire field sales. But that actually led us to another discovery, and that was serendipity. But with online sales, we were spread across all of the US and other markets that we launched afterwards. But with field sales in Poland, what we learned is that because field sales actually focused on hyper-local markets, we discovered that we started building local liquidity, we started benefiting from network effects, and that made us aware that we were not in a pure SaaS business, but actually we were in a SaaS-led marketplace business, because that helped us to discover the benefits of network effects and how to start this flywheel. And in order to do that, you need to be focused on hyper-local markets. So that was a learning that later on we applied to other markets.
This is a very interesting point that Stefan is making, and let me actually explain a bit more of what he's talking about. So this is a trend that we're seeing a lot. We call it SaaS-enabled marketplace. So you go into a customer base with a SaaS product. So in this case, it's scheduling software for the hair and beauty industry, hyper-local. And as you start, having these companies bring on their clients onto your product, there's a large number of consumers who are interacting with your system and so forth. So you're building a large consumer base of users of your product. So at some point, the network effect, the economies of scale take over, and you have a very large consumer base, and you have a large number of small businesses looking for clients. So you could also create a marketplace. So this is one of the strategies we see a lot these days, especially in various vertical marketplaces, where you start with a software as a service product, build a clientele of the software as a service product, and then at the right moment, flip that into a SaaS-enabled marketplace. So you have subscription revenue, and then you also start generating transaction revenue because the marketplace effect also starts to kick in. And that is one of the classic, textbook case studies that Booksy has done, is transformed from a SaaS company to a SaaS-enabled marketplace company. So Stefan, in that transition, I want to ask, did you make that transition based on just the hair and beauty industry, or were you already in other marketplaces or other market segments as a SaaS company before making that transition?
It was pure hair and beauty. At that time, we were focusing on this one vertical, because even within hair and beauty, you have a lot of sub verticals. And in order to cover them all, like at first glance, they all look very similar. But when you dig in, you realize that there is a lot of differences between barbers and hairstylists and nail technicians and brows and lashes and braids and so on and so forth. So we didn't want to expand and go beyond, because we felt we still had a lot of work to do within hair and beauty vertical. But what happened about 18 months ago in Poland, which is our most mature market right now, is that we had so many consumers using Booksy that some of these consumers, they started signing up with us as service providers in other verticals. So, a guy that used Booksy to book his barber appointments, he signed up with us because he owned a car garage or car workshop, and he thought, Booksy could be a great way for him to schedule his clients. We had some retail stores, especially during the pandemic and lockdowns and post-lockdowns, people were looking for tools to schedule their clients instead of having them queuing in front of their stores. So we had a lot of different verticals and different businesses we had never expected to use Booksy coming on board, including some banks and insurance companies and telcos. So today Booksy is a marketplace for all appointments in Poland.
Very interesting. And geographically, though, you started expanding very quickly. You were doing US and Poland, but you started adding more markets fairly quickly.
Yeah, and that was a big mistake, because after the US and Poland, we raised another seed round because we were successful in these two markets. And we had thought wow, we are doing so good, we should expand. And we launched 8 other markets, including India and the Philippines and Singapore and Brazil and Argentina, South Africa, the UK and Ireland. And a few months down the road, we realized that we were too stretched, too thin across all of these markets. And we were also too young of a company. We had immature processes. The management team was still fairly junior, and we didn't know how to manage all these 10 markets. We didn't know how to replicate best practices. In fact, we didn't have best practices. We just replicated all the bad practices from Poland and
each of these markets operate differently. I mean, how customer acquisition in the US and customer acquisition in India is very, very different.
Absolutely.
Especially SMB customer acquisition in India is a very different ballgame.
So that was probably...
You shut down some of those markets eventually.
Yeah, eventually we shut down 4 of them and put South Africa into a kind of a freeze or sleep mode. And we decided to double down on 5 markets that were growing the strongest. And that was definitely the right move. From the hindsight, I'm actually thinking that we should have been more aggressive, and maybe we should freeze 2 other markets and just focus on the US, the UK, and Poland. and maybe restart them now, as we are literally doing it as we speak right now. So we are now hiring more people in South Africa and Brazil, but that's easy to see from the hindsight, but back then we had that ambition to become the global leader, and we thought the more the better, which was a mistake.
So now, with the current situation, the current market, when we spoke, I can't remember exactly when we spoke, but you were already doing like 100 million revenue, right?
Revenue-wise, we are not there yet, but the value of services, GMV, it's already over $2.3 billion as of end of April. So that's a quite sizable business.
Now, how does your business split in subscription revenue versus transaction GMV revenue?
That depends on the market and its maturity. So in our most mature markets, and now I'm referring to cities, not even to countries. So our most mature markets yield twice as much marketplace revenue as subscription. So it's 2 to 1, or 60-70% coming from marketplace and less than 40% coming from subscription. In our youngest markets, it's even 100% subscription, because we don't really launch that marketplace until we see we have enough liquidity. So overall, it's like 25 on blended basis across all the markets. 25% comes from our marketplace and 75 still comes from the subscription. But fast forward two years from now, we are expecting to have way more revenue from the marketplace than subscription across all the markets.
Marketplace is a more scalable model eventually, but this is one of the questions we get a lot, is how do you seed a vertical marketplace, a two-sided marketplace? And my answer to that is, one of the best ways to seed a two-sided marketplace is with the SaaS-enabled marketplace model, where you figure out the requirements of one side of the marketplace, provide a software to meet those, maybe even provide software to both sides of the marketplace, bring them together, and then create the marketplace on top of that. So this is quite brilliant. Stefan, what is your marketplace commission? Is it 10%?
That's anywhere between 30 and 50%, but we charge for bringing new clients only. So this is one-time commission. We never charge for returning clients. So assuming that a client is gonna return and they are gonna visit that salon, let's say 5 times, we are kind of taking that money up front instead of spreading that across subsequent visits. And the reason we are doing that is to not to incentivize salons to poach the clients, because they feel that they have no incentive to poach the clients and disintermediate if they paid upfront, and it's still pretty good.
It's a bit more of a lead generation business model as opposed to a pure marketplace business model. A marketplace business model is more commission on the full transaction volume.
Yeah.
Got it. Very good. Switching tracks a little bit, I want to spend some time on your financing strategy. You have raised money in Europe and you have raised money in the US. So let's start with the very early stage financing. You raised an angel round in Poland. So talk about that. What was your experience? And what are some of the salient points of that particular fundraising?
I decided to take shortcuts because I was like well connected in Poland. I knew people. I had been an entrepreneur with a solid track record. I IPO'd my first software company, so people trusted me, and it was fairly easy to raise that seed round in Poland. But from the hindsight, I'm seeing that as a mistake, because we should have moved the company and started fundraising in the US as early as possible, because once you raise money in Europe and then you want to raise your B round in the US, like there is no connecting tissue. Like a lot of investors I spoke with, like none of them has already told me that directly, but when I back channeled through people that connected me with these investors. Like I've heard like a lot of answers that back then seemed like unjust to me, like, oh, I don't know any of his investors, this is a great business, I love their traction, but if I'm gonna be, if I'm gonna lead the next round and I don't know what it's like to work with these guys, I'm risking that, they will vote me and I won't have anything to say. Like, so a lot of US investors didn't want to invest into a company that was ran by a random guy from Poland with some random investors from Europe, and they didn't know anything about me or anything about our early stage investors. So that was probably...
I will make one comment though for people who are listening to you and learning from this conversation. You are not a first-time entrepreneur. So I imagine that even if you, as a non-first-time entrepreneur who has had track record, even in Poland, you come into the US, you have a shot at raising money. But it's not that easy for a first-time entrepreneur out of Poland or Ukraine or Hungary or even France to just land in the US and raise an angel round. That is not so easy. So I'm going to actually say that this conclusion that you are coming to is a little bit to be taken with some more analysis, because as a first-time entrepreneur trying to raise an angel round, it may not be such a bad idea to raise money in your local European geography, just because you don't have the option to just land unless you've bootstrapped yourself to a level of validation where US investors feel comfortable being your first check in. But if you need, if you're early, even if you're bootstrapped to a certain level of validation, but it's still very early, that you may not have an option but to work with a European investor. And by the way, folks, this is a very different scenario when you look at the India-US corridor. The India-US corridor is very well connected. It's not like the European corridor with the US. The Europe to Silicon Valley bridge is a lot weaker than the India to Silicon Valley bridge. India-Silicon Valley bridge is solid. You can raise money in India as much as you want to, and then come into the US, and you will be able to find very good bridges, regardless of where you raise your first round. So that's just commentary to kind of embellish the learning from your journey. So let's talk now about when you raise money in the US. What else did you learn in that process as a European company?
That's a very good question. One thing I've learned is that you should be very selective who you want to go to, because at first I was just like kind of blind shooting and going after random investors. And again, like, now when I look at that from the hindsight, it totally didn't make sense, because it's hard for any investor to understand a space they've never been in, like they've never invested into. So it's like trying to fit a square peg into a round hole. So I met with a lot of investors that are super smart, and I expected them to understand our business model, which is not that easy when you look under the hood and look at all the wiring. Like, there is a lot of levers that we have, and a lot of investors, like, they didn't get it. And I was quite surprised, because I thought, wow, these are like super smart guys, like post Harvard, post Stanford, with MBAs. They invested into some great companies. Why they are not getting it? And what I've learned is that, being an investor, it's about pattern recognition. So, and they specialize. So if somebody has never done SaaS-led marketplaces, and you pitch the model to them and you tell them, like, right now we are just, doing land grabbing, and, the average revenue per provider is low, but as soon as we build liquidity, it's going to be higher. like if they haven't seen that model working, like they don't believe you. So
Yeah.
it was very important to go.
To be fair, when you went to do this fundraising round, the SaaS-enabled marketplace model was not yet that prevalent. It has become more prevalent since.
Yeah.
So I think there's a bit more understanding of that model, but at the time, there's a lot of timing. The minute you're innovating, you're bringing new things to the table. So there are certain investors who are very, very good at grasping innovation and grasping something new and something different they can extrapolate. And then there are other, and the vast majority of investors fall in this category. They're just looking for pattern matchings. And that's where I think you would, if you are following my work, folks, you have heard me say this over and over again. Just like you're looking for product market fit, look for investor entrepreneur fit. Investor entrepreneur fit has to do with geography, has to do with business sector, has to do with business model, has to do with stage, has to do with, style of investing. There's a whole bunch of parameters in investor entrepreneur fit that you need to also pay attention to before you can raise a successful venture round. So what Stefan is saying is very, very important, and I want to underscore what he's saying. Please internalize this point that if you want to raise money, investor and entrepreneur fit is your mantra. Otherwise, you're not going to be able to close a round.
Couldn't agree more with that.
So how are things now in Poland? Have this ecosystem matured quite a lot?
Yeah, I think the ecosystem in Poland has made tremendous progress in the past couple of years. There is a lot of new funds, and they have amazing investment portfolios, and they started investing across Europe, and they are also making some investments in the US, and they are learning very fast because they are co-investing with funds like Andreessen Horowitz, Insight Ventures, with Index Ventures.
The bridge is being built, which is great.
Exactly.
And what about the entrepreneur side? How many entrepreneurs, how many startups are operating in Poland right now? Do you have a sense?
I think it's, a few thousand, and there is probably a couple hundred like really good companies. The ecosystem is still young, but on the backs of companies like Booksy or Dog Planner or Brainly, there are some ex-employees of those three companies. They are starting their own startups, and they've learned with us. They've seen how we did it, and I think there was that glass ceiling in Poland for many, many years. Like, people did not believe that you can build a global startup out of Poland. But as there is more and more successful examples, more people believe that they can do that. They work at these companies, and they get the courage, they get the conviction, and there is more companies starting every single quarter than ever before. So I'm very optimistic that both the ecosystem is gonna flourish in the coming years, and there is a much stronger bridge going to be built between different ecosystems.
Fantastic. Well, congratulations, Stefan. You've done a wonderful job with Booksy, and your story is very encouraging for these millions of technical people, people who don't have a business background but come out of the depths of technical knowledge and expertise and have learned the business side. I'm a big believer that people who have a technical background and have worked seriously in tech can learn the business side. And we've seen this over and over and over again. I do not have a business degree. People think I went to Sloan at MIT. I didn't. I'm a computer scientist. I'm a hardcore computer scientist. I was working on the one of the two first parallel computing projects at MIT. I've done very serious technology work, and I learned everything else as I went along on the job. So my first job out of grad school, or while at grad school, was a CEO job because I started a company. So I'm a huge believer in technical people being able to learn whatever you need to learn about business And 1 million by 1 million is a perfect place for you to learn that, because we have structured the whole program with that in mind, that you can learn, and we are going to learn you bit by bit by bit. We're going to, help you learn that and teach you all of the pieces that you need to learn. So Stefan, you're a textbook example of my mantra.
Thank you. And I'm proud to be part of that program. If I only help one entrepreneur today who listened to our conversation, I'm going to be fulfilled.
You did, because we have actually 1Mby1M premium member company that is trying to launch a marketplace. And I just talked to them yesterday, and they're here listening to you. And I talked about SaaS-enabled marketplaces to them. So I'm sure Jill and Ricky Howard are listening, and I'm sure you are getting a feel for what we are talking about here. So they're not technical, but they're learning the business model that we are talking about, and how to seed a SaaS-enabled marketplace business. So perfect. Thank you, Stefan.
Thank you for having me.